I want to talk to you about borrowing skills that can actually save you thousands in interest and fees. Okay, so if you're looking to, let's say, reduce your APR, and it doesn't matter. It doesn't matter the business loan that you're trying to get, whether you're getting a business loan or a business line of credit or any type of business funding. There are certain skills that you need to acquire if you want to really reduce your APR. Okay, so let me give you the top hacks I want you to really pay attention to. I mean, first of all, this is the most logical factor here: your credit score. And by credit score, I'm talking about your personal credit score, but also your business credit score, right? So if you want to really save thousands in interest and fees, you got to really work on your credit score big time. The reason is that usually a business loan is usually in it's more significant, more material than a personal loan, right? You can have a loan, a business loan for half a million or even a million or even millions of dollars, right? So the interest actually a little shifts 1 point or 2 point or 3 points in the APR can have a significant impact on your interest. Okay, so trying to really improve your credit score, and you want to improve your business credit score simultaneously that you are doing the same thing for your personal credit score. So this is going to save you a big time. Okay, another borrowing skill that can save you thousands in interest and fees is actually having a business plan. I'm not speaking about you having a 50 page or 100 page business plan, but you got to have a solid business plan. It can be 5 pages, it can be 10 pages, but having a business plan tells the lender, tells the bank, tells the credit union, tells the online lender that you actually have a vision. You're not just going to borrow money for your business for random acts. Okay, you have a plan. So a business plan is not just you talking about marketing or talking about the competitive analysis in your industry. No, you are telling the lender that you have a specific use of the loan proceeds. You're going to use the money for something. You're going to use the money for working capital. You're going to use the money for inventory. You're going to use the money for advertising, the money for business expansion. So this really reassures the lender that you know what you are really going to do with the money. Another borrowing skill that can save you thousands in interest and fees has to really relate to collateral. See, the whole thing is that when you are trying to borrow for your business, you borrow for your organization, you borrow for a business purpose. Think about whether or not you may have the collateral to actually pledge. Okay, now a lot of times entrepreneurs don't want to hear this, but hey, listen, if you are going for an unsecured business loan and the lender is charging you, let's say 15%, and you have an asset sitting there, maybe inventory, maybe your accounts receivable, maybe machinery, and you can pledge, you can collateralize the loan with that asset, and so all of a sudden you see the APR going from 15%, let's say, to 10% or 8%. That's a lot of points, and those points will translate in reduced interest and fees. Okay, so offering collateral in some cases can really can make a big difference. So think about it. Think about it. Okay, pledging. Think about pledging a business asset to make sure you are reducing your APR. So next time you want to borrow for your business, think about collateralizing the loan if you have the proper assets. You also want to another borrowing skill that can save you thousands in interest and fees is actually it's about research. See, the whole thing is when you're trying to really borrow, you have to start research. You have to do some research. Why? Because nowadays you have various lenders, business lenders. You have online lenders. You have banks. You have credit unions. You have alternative lenders. Okay, so you have a lot of lenders. Okay, so you got to do research and know exactly which lender you want. Because when you want a business loan, maybe the bank next door is not the right institution for you. Maybe you want to go to an online lender. You want to go to an alternative lender. For instance, you're looking for a merchant cash advance. You know, your bank or a credit union is not going to give you that type of business funding. So you want to really find the right lender, and that starts with research. So you want to start your due diligence early on. And the funny thing is nowadays you have loan aggregators, you have loan marketplaces too. You also have websites that allow you to really compare and contrast business loans. So that's kind of cool. You want to really go through that also to make sure that you are doing as much research as possible. Another borrowing skill that saves you thousands in interest and fees is actually it has to do with the lender selection. I think I touched on that a little bit before when I said you got to really do your research. Now, doing research doesn't mean that you have to really say, you know what, I have a relationship with this bank, so I'm going to stick with this bank, or I'm having a relationship with this institutions, so I'm sticking with them. No, sometimes you have to really see what's the best outcome for you, depending on the specific business loan you want to get. What I'm trying to say here is that if you're looking for, say, an unsecured business term loan, you don't have the same foundation, what I call the same underwriting foundation, as if you're looking for invoice factoring. If you're looking for, let's say, merchant cash advance, if you're looking for equipment financing, if you're looking for an unsecured business line of credit. So all types of business funding call for different scenarios, and the lender that's going to accompany you has to be the specific lender that you want, right? And sometimes if you are trying to really save thousands in interest and fees, you might want to split the borrowing amount. So why stick with only one lender? You can really go with two, three, or four lenders depending on the conditions that they have for you, right? So don't put all your eggs in the same basket. Don't put your eggs in the proverbial same basket. Okay, you want to diversify. So, and you want to select your lender very carefully, because some lenders have conditions and they can't change it. Like if you go to a bank, for instance, banks have condition and they're not going to change it. No matter how long you have established a relationship with them, because banks have some regulations they have to follow. Okay, credit unions have charters they have to really follow. So they can't really change that much. So pay attention to exactly what you're looking for. And sometimes if you are a small business, you're looking for a business loan, you can even go to something called a CDFI. So this is a community development financial institution in your area. Instead of going to a traditional bank, you can just go to a CDFI and have better loan conditions there. Another borrowing skill that can save you thousands in interest and fees relates to your company's profitability. And let me explain, because this can be a little confusing or counterintuitive. See, the thing is, usually whether you want to borrow or not, you want your business to be profitable, right? But if you want to save on interest, if you want to save on fees, profitability is going to be key. You know why? Because some lenders don't even ask for paperwork. Some lenders are even asking, they're only asking you to connect your bank statements to their system, or to connect your accounting software to their system. They don't care about your tax return. They don't care about your accounts receivable. They don't care about whatever you have. Okay, they don't even care about your business plan. So for those lenders who don't care about your documentation, you want to really make sure that your business is profitable. And there is nothing more reassuring to a lender that, hey, listen, the business to which they are going to lend is a profitable business. So what you want to do is, when it comes to profitability, you can play the game multiple times. You can either time the business loan, so you can see if your company has made profits this quarter, like this quarter and next quarter. Maybe it's time to apply for a business loan. But if the company has actually lost money in the last 3 to 9 months, for instance, you want to wait a little bit. So instead of going for, let's say, a business term loan, you might want to really switch a little bit the kind of funding that you want. Maybe go for an invoice factoring, okay, accounts receivable financing, or any type of revenue based financing, as opposed to going for an unsecured business term loan or an unsecured business line of credit. Okay, so but the bottom line here is that if you want to really reduce the fees you're paying, if you want to reduce the APR you're paying, try to really try to paint a profitable picture, okay, about your business. So that's going to help you big time. That's going to reassure the lender that, hey, listen, your company has a positive trajectory, okay, and that you will have the funds to repay whatever loans they advance to you. Another borrowing skill that can save you thousands in interest and fees this year actually has to really relate to how you refinance business loans in your portfolio. And this is actually this applies to you if you have several loans outstanding or one loan outstanding, but that loan that's outstanding has a high APR. The cool thing is banks, credit unions, lenders in general are sending solicitations to entrepreneurs every single day. Chances are, if you check your mail right now, you probably receive some solicitation from a bank or from a credit union or from whatever institution, right? And they're all telling you, hey, listen, refinance your loan, refinance this, refinance that. So if you have a loan right now and the loan is charging you, let's say a 15% APR, and you get a refinance offer at 10%. I mean, the delta is pretty stimulating, right? You see a 5% delta, that's pretty huge. And so you want to really refinance ASAP. So if you want to really save thousands in interest and fees, I want you to get better at the game of refinancing whatever loan you have. And this applies. See, by the way, when I say a business loan, this applies to any type of business funding. Okay, it can be a business line of credit, it could be equipment financing. Okay, and this is kind of cool. Now, for invoice factoring, for accounts receivable financing, for merchant cash advance, for any type of revenue-based financing program, things are a little different. Okay, I'm not going to say generically. Oh, I got it. Generically, okay, in a generic manner. Yeah, I got it. In a generic manner that, hey, listen, you can just refinance and everything is fine. No, it doesn't work that way. Okay, so the whole generic process doesn't apply here. Okay, so but if you have any question, let me know in the comment section, and maybe I could really explain further to you. Okay, in and I will tell you maybe what scenarios will be suitable for refinancing and what scenarios will not. Okay, so this is one of those things, but the profitability part is generic. You can apply it to all situations, but the refinancing is not. Another borrowing skill that can save you thousands in interest and fees actually has to relate to the repayment window. So basically, what I'm trying to say here is that when you are actually getting approved for a loan, the underwriter, the lender, is looking at the risk. They're looking at their risk appetite. So chances are, if you tell them, listen, I'm going to repay this loan in 5 years versus 10 years, the risk actually multiplies big time. If you're going to repay the loan in 10 years, nobody knows what will happen to you in 10 years. But it's the same thing. Nobody knows what will happen to you in 5 years. But the longer the repayment window, the higher the interest rate. And this is actually to compensate the lender for the extra risk of you going in default, right? So the longer the repayment window, there is a possibility. It can be a slight possibility. It can be a big possibility that hey, listen, you default on the loan. So when a business lender really advances you funds, they're really scared. They are scared as hell, right? They want to be paid back, and they want to be paid back plus interest. So if you want to really, let's say, reduce your interest rates and fees, think about the repayment window. Don't go for those longer time frames, 5 years, 10 years. If you can repay the loan in 3 years, do so. If your business is generating enough revenue for you to repay the loan in 2 years, why not? Or even 1 year, okay? Now, 1 year could be a little disruptive to your budget, but hey, listen, it's all about cash inflows and cash outflows. So if for any reason you are able to really get the kind of revenue that you need to really to cover, to absorb, to really navigate this funding requirements, go for it. Okay, it has to be something that works for you. So when securing a loan, that's the bottom line here. Choose the shortest possible period they offer. Okay, this will significantly lower the debt you would have to pay and increase the chances of getting a lower interest rate. So let me give you an example here. I'm going to put this on the screen so you can see it. You can see the difference between 2 years and 5 years, for instance, for a $10 million business loan. Okay, and for a rate of interest at 2% per month. Look at the total repayment value, 12 million for the first one. Okay, and basically you have a 17 million for the second one. That's a big difference right there. Really, really big difference. But yeah, this is the kind of scenario you have to really think about if you want to reduce your interest and fees. So let me give you a few extras here. It's really important to understand that if you are trying to save thousands in interest and fees, you have to really make sure that you are choosing two things. You are choosing the right lender, and you are choosing the right loan, the right type of business loan. Of course, when I say you have to choose the right type of loan, that means you have to really choose the right repayment window also. Okay, so that's going to be very important to you in the long run. One thing I want to say also is that you have to understand it's not about you choosing what you want to borrow. It's basically the lender telling you, hey, listen, based on the loan that you want, this is our criteria. These are our criteria. So you have to really abide by their criteria once you choose the type of loan that you want, right? So everything starts with you. That's for sure. But once you actually choose, make sure you are able to, let's say, comply with their conditions. I mean, if you are going for a working capital loan doesn't have, for instance, the same requirements as if you are going for a business term loan or business line of credit or equipment financing or anything of that nature, right? So it's important. But one thing I want to say also is that you want to really cultivate what I call familiarity. You want to really emulate familiarity. That means what? That means you want to go for a lender that provides loans to a specific industry. So if you are, let's say, in healthcare, for instance, it's just better to really associate yourself with a lender who has already and who still lends to the healthcare industry. That way they know the quote unquote problems, but also the opportunities in the space. So don't just apply with a lender, like with a random lender, for money. Even if you believe that there is money floating around, you still have to really go to the right lender. Otherwise, you'll just be wasting your time and you'll be wasting your energy. And in the end, you're not even going to get the right. You're not getting the type of loan that you need in the first place. So just be very careful on that front. And also, one thing I want to tell you also is that remember that if you are a business, you want to really make sure that you are incorporated, right? You are incorporated. Don't try to get a business loan if you are not a business. You got to be a legit business that's incorporated, and that once you are incorporated, you are able to apply, not a problem. So, in conclusion to this conversation, I shared with you borrowing skills that can save you thousands in interest and fees. I give you the top hacks, the extras, and the conclusion. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.